formation now. What we want to see now? We want to know if there is some selling in the market. So let's link together two consecutive highs, and then let's compare the slopes again. The line on the mid cap is almost flat. The line on the shitcoin index is downsloping. There is more selling pressure here. So the second asset has more buyers and less sellers. In both assets, we will see a rally, but which asset will outperform the market? Which asset will have the better rally? Now we have seen the mid-cap index. I think that now you see the value of this technique, because when you are trading cryptocurrencies, you should always look for relative performance. And now I will show you an example of selection from the weekly report that I write. In the weekend, while I was preparing the material for today's session, I thought we are going to talk about relative strength, relative performance. Let's show a very good candidate on the crypto report. I want to show this methodology in action, not just historical charts. I have published this chart on Saturday morning. Look how Chainlink is outperforming Bitcoin on the last rally and reaction. Higher high, higher low on Chainlink, while Bitcoin is making a lower high followed by a higher low. This was our candidate for this week. And sometimes it's easy for a trader show many setups and then just wait for a couple of trades that work. But our goal in this class is different. We want to be very strict with ourselves because a good selection saves us time and money. And this was the result yesterday. So we want to be absolutely transparent in this class. On the intraday, this was a very good move. Even with few trades like this during the week, you can be in a good shape. Now the question is, what we expect now? Because basically we are touching the resistance of this channel. This is a very important channel. So you want to be cautious at this point. If you are an intraday traders, basically you can be happy with this profit, and it's a 30% moving one. Basically, a couple of days is very good for the standards of financial markets. For the crypto standards, you can always find sometimes someone that says, "Okay, but I want to double every day." Well, let's be realistic, guys. But today we see a very interesting price action here. Supply is coming in on this bar. So the volume here is very high. Now we want to understand if this asset, if the selling that has come into the market will be absorbed on the way up or will just fail here. Our intraday trade or very short-term swing for now is closed. Now we want to talk about the importance of the relative strength on daily charts, weekly charts too, because comparative strength is even more important when you analyze long-term charts. So this is the long-term chart of Chainlink. This is not updated to today. Today we have this kind of supply bar here. So basically the weekly, but weekly is not finished yet. So Chainlink was performing better than Bitcoin throughout 2018. Look at the first accumulation range. 1 year, the crypto space can generate very high targets. remember, cryptos are very volatile assets. High volatility throughout the range can generate big counts in a very short period of time. We have seen this in the S&P lately. Then what happens here in April? The catalyst for the big run was the announcement of an important partnership between Chainlink and Google Cloud, which became public only after a prolonged period of absorption. Focus here on this point here. The release of the news was perfectly timed for a long entry. Buy the rumor, sell the news? Not yet, because this spot is just a major sign of strength in this long-term accumulation. At this point, CEO types are not using the news to sell their shares. They are advertising the trend. So indeed, this is a weekly chart that you always want to time your entry on the daily chart. So Chainlink outperforms the market and then forms another range. The current consolidation shows elements of comparative strength again. Upsloping range, while Bitcoin is underperforming. Look at that big shakeout here. It's the COVID reaction. It still creates a higher low. Bullish. Quick recovery. Bullish. I personally think that Chainlink will surprise us in the future. But I'm not in this market with an investor mentality. I think it's very important for crypto traders to think and act like speculators. But when you see such a constructive long-term formation in the crypto space, you can even think of campaigning an asset. And generally, prolonged outperformance of weekly charts tend to persist until the price cycle of the crypto market is broken. Now let's just focus on this area, this accumulation range. This is the horizontal count of the first accumulation range that we have seen in Chainlink. One box reversal, user-defined scaling. You can find a lot of information on our YouTube channel about point and figure chart. We cannot explain everything here. By the way, that material is free, so it's always there. You can read a lot of materials on Bruce Fraser blog. It's wonderful. You can clearly recognize on this chart the major sign of strength, followed by a backing up action. Now look at this beautiful count. It's a 10-bagger, and it took just 1 month to reach the target. Or a couple of months. Beautiful chart. Now let's see the current consolidation. This is an old chart. So this is the PNF chart of the current consolidation. It's not updated because in today's price action we've seen that kind of supply bar. You can easily recreate this on stockcharts.com. In this case, I've used a logarithmic scaling. Three-box reversal, 5% scaling. Look at those wide swings from $1 to $5. And we are still in the consolidation. Now maybe that we are in the major sign of strength of this big formation. We are backing up. We are in the backing up action. We have to see. We have to see. But I love PNF charts in this volatile environment because they help us to reduce the noise. I see that especially very young traders in this space always think about the small moves because there's a lot of volatility in those momentum instruments. But we can even study volume price action on this chart. Look at the volume here. Let's try to read here the Wyckoff story of this asset. At point 1, we see profit taken by institutions after a massive run. At point 2, we see a slight penetration of the support on a local increase of volume. The volume here is increasing. We come back here. Short-term bullish is kind of spring, but do you want to trade the spring? I know that you can see the result here, but on a theoretical level, you want to buy the spring here? There are the conditions to buy the spring, yes or no? No, because basically the context at this spot is still the context of a downtrend. So the odds are not in our favor. We want to see spring when you have signs of accumulation in the formation, or when they are in the uptrend, like here. But this is not the best place to buy a spring. Point 3. Climatic action. Look at number of O's, high volume, extreme oversold, quick recovery. Point 4. We see a retest here of the low as a higher low on lower volume. Supply has been absorbed. This is bullish, and this could be on the intraday, not on this chart, a short-term opportunity. Price get back to the previous value zone. This was the value zone for Chainlink. But we still have to build a bigger cause in order to break the long-term resistance. Price fails to commit above this resistance, this level, and then comes back to the support. Point 5. Very high volume, but we make a higher low compared to point 3. This is bullish or bearish, guys? It's bullish. This is very bullish. Buyers are buying this asset, are coming in. So bullish action confirmed by a quick reversal that lead us to the top of the prior significant down bar. Here. So you identify the down bar here. This is basically a down bar. It's not red, but it's a down bar with a column of O's. And then what we see after the recovery? The lowest supply signature of the whole consolidation. Basically, price is suggesting to you, we have seen demand. Demand was not enough to break out this level of supply. Then we see more demand, we see a recovery, and we see no supply here on the top. And this is extremely important, because you always want to know that you have demand on the bottom and no supply on the top. So this is a very nice opportunity. You can trade this on the, like on intraday, on vertical charts, not just on the PNF, because it's difficult to trade directly from PNF charts. It's possible, it's a great opportunity to do that, but for now we want to just focus on this instrument like an educational tool for now. So the lowest supply signature in the whole chart. High or low again, the local resistance becomes support. Point 6 is a very tricky point. We see a local trading range with a break in the middle. We quickly recover, we make a higher high, but there is still a significant amount of supply. And we are on the long-term resistance here. We would like to know how much supply is still there at this level. We have a test which is bullish, but we want to see a very consistent absorption. If this formation is truly bullish, you want to see higher lows and higher highs and then acceleration to the upside. So basically you want to see some kind of testing action on the top of the formation and then a breakout that confirms that this is another accumulation. Instead, it breaks. And this is not what we want to see. So this huge bar is the COVID reaction. It's a dramatic shakeout, but still a higher low, a slightly higher low compared to point 3. On the vertical chart is more clear. A higher low. This is much better than the price action of the S&P. Low cap, low liquidity cryptos holding better than the S&P during this dramatic liquidity event. Relative strength, comparative strength, demand is coming. On the next bar, in fact, we see a huge automatic rally. But the bias of the formation is still not clear. What we see next? This is a sign of strength bar, followed by an LPS, a last point of support. Now let's look at a very high volume signature on the last rally. Compared to the vertical charts, on this volume, on the PNF chart, it's basically a cumulative volume. We see high volume, but on the down bars, the supply signature is muted. How do you interpret this? It's very tricky, and each time supply comes in, it's quickly reabsorbed. I think that if we start to see increased effort to the downside associated by increased result to the downside, that will be a signal that the backing up action is starting. And what happens the following days? Today, basically we see a bar here, a supply bar, and we still want to see if it's possible to see some kind of absorption at this level or not. So many traders are just screaming, this is the upthrust, definite upthrust. No, we want to see some kind of confirmation because it's not automatic to see a kind of failure here and then price falls to the support. We want to see some kind of confirmation because absorption can always happen at higher prices. So now that you have explored the basics of the selection process, let's practice together. Here's a very interesting exercise. So the bias of the market is to the upside. You want to open a long here. Which asset will outperform, A or B? Which asset will have the best rally? I'll take a short break, just 1 minute, but in the meanwhile, please type your answer. Asset A or asset B? 1 minute. So the majority of you has said B. Here's the solution. B, Bitcoin. So good job. So the message here is that when you are trading on the intraday or just you are doing a very quick swing trade, you always want to look for the short-term outperformance. In this case, we switch from the leadership of the asset, switch from Chainlink to Bitcoin. This kind of rotation between one asset and another is very common in the crypto environment. And we will discuss this in the next session. Now let's talk about a very important concept. This is my favorite part of the webinar today. Let me know if you have any questions about this chart, by the way, before going next. Okay, good. So this chart is clear. Close your eye and think of an uptrend. I'm sure that 90% of you is thinking of a trend like this. When we think of trends, we always have in mind this kind of orderly moves, almost square ranges, almost perfect trend lines, and so on. This is the S&P on the intraday. It's not the current price action. This uptrend preceded that scary COVID reaction. We miss a part of the distribution here. But everything looks so textbook on this chart. Why? Because every day a huge number of institutions trade this instrument. This is one of the most liquid financial instruments in the world. And the constant participation of big institutional traders tend to create orderly trends. Many Wyckofians trade this instrument because it works in a very orderly way most of the time. Now just a very flash quiz. Look at the consolidation here with the shakeout in the middle. We have already seen a consolidation like this in our first session, when I was discussing the market history of Bitcoin. Do you remember the China ban story of Bitcoin when Bitcoin miners were forced to relocate their business? Here's that consolidation on the daily chart. Look how similar they are. Notice that shakeout action followed by a quick recovery. Here and here. And we are comparing an intraday chart with a daily chart. At this point of your journey to the Wyckoff methodology, your brain starts to catch analogs between different charts. And I hope that, especially now, you can see the value of studying historical charts, because markets always repeat. Then let's see now another financial instrument. Momentum instrument. Very interesting price action. It's Tesla. Multi-year formation that out of sudden wake up. Momentum starts and we see an uptrend with extreme acceleration. This reminds me a lot of Bitcoin moves. But how do you draw a trend line here? This is the weekly time frame. Let's switch to the daily. How do you draw a trend line here on this historical chart? You look at daily chart and think, Too much momentum here. Conventional trend lines don't work here. But I attended a webinar some time ago. This guy was talking for hours of Bitcoin. We were analyzing an old historical chart of Bitcoin from $2,000 to $20,000. I remember that the trend was much more manageable using a log scale, like this. And there is no doubt that log channels are much more useful than conventional trend lines for this kind of momentum instruments. Here's an example of a reverse trend line on a logarithmic scale. You start linking together two consecutive highs, then you identify the low in the middle, and you establish the channel. Even in this log channel, you can see that at some point, the stride of the trend changes, and we have a climatic action. At point 1, here, the supply signature increases, and we are close to the overbought condition of the trend. Here. What can you do here? You can exit your position. Of course, you can exit your position. However, it's a very common mistake to exit your position just because we are in the overbought condition, especially in this kind of instrument, where we see a prolonged period of inactivity and finally buyers come on the way up. In fact, at point 2, supply is lower and price breaks the old trend line. We are now following a new trend line, and the trend continues until we see a huge climatic move. And this is a log scale, remember, so this is basically a double. If you exited the market at $500, the market has punished you because of your poor knowledge of supply and demand dynamics. And that's just my personal opinion, but I strongly believe that the crypto market and momentum instruments in general have no mercy for people that want to just mechanically apply a set of rules without understanding the true dynamics of supply and demand. Every time we get punished, we tend to think things like it's a game of probabilities, it's the cost of trading business, just wait for the next spring or the next uptrust. This behavior, especially at the beginning, will lead you to have poor performance in an extremely speculative market. So be strict with yourself. So we have studied trends on the S&P, on intraday, on Tesla. Now let's look finally at Bitcoin. So we will review this run consolidation on the bottom later. Now let's just focus on the uptrend. If you just want to use a conventional trend line on the arithmetic scale, it doesn't work. Let's switch to the logarithmic scale. Look how orderly this uptrend looks now. This is a chart that I sent to Roman and Bruce 1 year ago, and they've commented this chart in the weekly market discussion. I think that you can recognize Roman's marking on the top. If you don't know the weekly market discussion, please go to our YouTube channel and just look for some episode for free. It's such a great source of knowledge for Wyckofians, and you can see there all the principles that we teach in a live environment week by week. And the stock market is very similar to the crypto market. So what was the idea behind this chart? We see two reaccumulations, this and this, and then a climatic move from over the log channel and climatic characteristics. This chart does not show a change of character yet, but the extreme volume at the end of the chart is screaming be more aggressive with your stop loss. The stopping action could be behind the corner. What we do in these cases? In this case, you raise your stop loss, and just in case of a sudden reaction, you are not sacrificing the gains that you had on this beautiful climatic move. If you are new to the methodology, Roman teaches all those techniques in the Wake of Trading course part 1 and 2, and there are entire sessions about this topic. By the way, let's continue this kind of parabolic move. At this point, you feel very confident about your analytical skills. You are going to apply logarithmic scales everywhere and just enjoy the trend. And here is where the market gives you a slap in the face. What about these high momentum instruments? These are basically mid caps, low caps, crypto market. This is Grayscale Ethereum Trust. It's a very interesting instrument. It's traded on the OTC market, so it's not a crypto. It's a basket of it's a kind of ETN. But the behavior of this price and volume is basically the same, that cryptocurrency. These are the most speculative instruments within the most speculative asset class in the world. These charts are the reason why today you are spending a couple of hours of your precious time in front of a screen. Someone could say, well, these are very small caps. It's a very manipulated market. This is a kind of nest environment with its own rules. So the same rules that we can apply in every day in free markets are not valid here. Free market. Please erase these two words from your vocabulary. No market is really free. The creation of value is not a simple algorithm. It's a complex mechanism. And even on a theoretical point, a good market is not a free market. A good market is a liquid market. It's a market where participants, big institutions, can operate on a daily basis. They can make money, lose money, but they stay in the system. They don't stay on the sidelines. And just think of the action of the Federal Reserve today. They are not just pushing up the price of assets. Their goal is to preserve the condition of liquidity of the market. Liquidity attracts more liquidity. Illiquidity scares market participants. And the quality of the market participants changes according to the condition of liquidity of the market. We know that very illiquid assets will never attract trillion-sized composite operators. But the principle of demand and supply are the same. Now, how can we catch these beautiful momentum moves? Using a simple trend lines on a logarithmic scale is not enough. The conventional channels that we draw are not the best tools here. But this is not a valid reason for giving up, guys. There are a lot of speculative opportunities in these small markets. For example, let's look at this chart. This is Republic Protocol. We have discussed this chart in the crypto report many times in the past. Usually in the crypto report I focus only on the major asset because covering 3 or 4 assets in depth